In this video, guys, we are going to talk about what is top-down analysis. Top-down analysis simply means to analyze the market from the higher time frame down to the lower time frame. To simplify the direction, know where the market is heading to, and know the bias of the market. And 2, time frame needed for the top-down analysis. The only time frame you need for this top-down analysis is 1, we have the weekly time frame. 2, we have the daily time frame. 3, we have the 4-hour time frame. That's for confirmation entry. You can use 1 hour also, but I usually use 4 hours for my confirmation entry. So I would like to be using something like this for the world time frame. Something like this, something like this. Like that. So like this, like this. So these are the only 3 time frame needed for this top-down analysis. So let's go to the confirmation needed. The only confirmation you need for the top-down analysis before executing the trade. You can't just execute the trade when the market is at a POI without any confirmation. So you need at least 2 confirmation. 1 is the pin bar or doji confirmation. So whenever you see the doji candlestick or the pin bar candlestick, that signifies that there's a rejection in that area. And the second confirmation needed is bearish or bullish confirmation. A long, large bearish or bullish candlestick for the confirmation. So, and the last one is how to find the top-down analysis. So how to find the top-down analysis, we're going to move into our chart. I know you guys must have waiting for me to move to the chart side, so we are going to there. So let's go to our chart. So but before we go to the chart, before I show you how to find the top-down analysis, I would like to show you the trade I've took for the top-down analysis. I would like to show you my last trade I took on the top-down analysis on Monday, which is like 3 days ago. So let's go to Euro USD. So as you can see, this Euro USD. As you can see, this is the Euro USD. So I saw the supply coming to get a supply candlestick here with this massive huge imbalance here, which is not yet free. So I mapped it out, as you can see. I write it here weekly. As you can see, I map it here weekly supply. So but then the market was at this level. So the market keep pushing. I wasn't interested to keep pushing. I just want the market to come and mitigate this area. So finally, the market broke past this liquidity pool and finally tapped into this weekly area. Then I moved to the daily time frame. I was waiting patiently, tapped into this area. So I can't just buy once the market tapped into this weekly area. So we have to see if the market has intention to sell. So I wait for this. The market sell, go back, create low, pull back, and finally take this low, then pull back to this area, start reacting. So as you can see, there's a lot of noise there, so I can't just execute on the daily time frame. So instead, what will I do? As I've already known the buyers, I will look for the supply that creates this breakout structure on the daily time frame, which signifies sellers have started stepping into the market. So I would like to look for the supply that creates that break of structure, the last bullish candle before the move. So as you can see, this area is a last supply area for the big move. So as you can see as well, let's go to the 4-hour time frame because the market has already tapped into that area. Then we are at the 4-hour time frame. So as you can see, there's another unmitigated supply at the 4-hour time frame. So I mapped it out and wait. There is also the available liquidity around this area, which the market swept to mitigate this long order block. And after it mitigated the order block, the market quickly shoot down, which gives us one of the confirmation with this bearish engulfing candlestick. So this bearish engulfing candlestick alone signifies that sellers have started stepping into the market. Big banks, this is the sign of smart money screaming to you that the market is going to push to the downside. So after I find this long bearish engulfing candlestick, the same as on the lower time frame too, for those of you who want to trade on 1-hour time frame. But like I said, I always use 4-hour my confirmation. So but in this chart you see here, the 1-hour entry is also cool, but which I did use, and the 4-hour confirmation candlestick is also cool. But in the 1-hour time frame now, that's to minimize your risks and to hit your target quickly on time. So I use the 1-hour candlestick for the confirmation. As you can see, the long bearish engulfing candlestick before the last bullish candle. You can see the rejection in that area, the hammer rejection, then the last bullish candle before the long bearish engulfing. So after the move, I just entered and put my stop loss above there, a few pips above the low, above the high, sorry. So the market started pushing down, pull back, push to the downside. You can see there's another change of character on the lower time frame. This LTF signifies lower time frame, but already my target is here already. So the market finally hit the target, which I was able to get a 1:3 to 4. So it's a massive win. So as you can see, already the market bias is trying to push down even more. So I still have another entry. As you can see, there is this huge imbalance here on the daily time frame, and there is also some unmitigated order here on the weekly time frame. Like I told you, top down analysis, the only time frame you need on this top down analysis is the weekly and the daily time frame. So as you can see, there's available liquidity here, there's also available liquidity here, and there is this huge unmitigated weekly demand, which lead to multiple break of structures here. So the market might push to this level someday, but it will take a very long, maybe by next year. So let's go to the lower time frame. As you can see, my target was hit. So cool, smash the TP 1 to 3, boom. Nothing much than that. So I'm still looking for another entry again. You can see this order block before the massive bearish candlestick to the downside. So there's also some available liquidity around this area. So you can see that as well. So I've already set my sell stop order, my buy, my stop loss, just few pips above the order block area. So as you can see, it's a cool trade. I get this low, 1:4. We're done for the week. So you can see here, this is a trade on Euro USD, which I took from this area to this area. So we'll be waiting for a confirmation when the market gets to this point here. So, but before we go, I would like to show you, I would love to look for another chart and spot the same exact strategy. And this is my order running trade. we are currently making. What happened to mine? What's going on here? What happened to my analysis? Yeah, that's why I took the trade. So it's gonna be long swing trade. So I'll be going for this low. So I see, same strategy. See, it's a break of structure here, change of character here. You can see this long demand. The market is still rejecting this here on the weekly time frame, and there's some order here yet to be filled. It's a weekly time frame. You can see daily break of structure, daily change of character, daily break of structure. You can see market has tapped into this area here, so the market is reacting to this area here, which is also a resistance area. So that's the reason I took the trade. So on a massive profit there. Let's go to my other account. As you can see, I'm making thousands of dollars here. So the target is still far. This is a live trading account. So before we go, let's analyze the last market. Let's see which market I have not analyzed. What's wrong with my connection? Let's look into this trade. Let's see what we got here. USD CFH. So let's move to the weekly time frame. Let's see what's going on there. So in the weekly time frame, there is this rejection, triple top, market push to the downside, pulls back, push to the downside, create a demand here, a supply here, push even more, break of structure. Then the market mapped out the last bullish candle before the bearish move, the bearish impulse candle. As you can see, this is our last imbalance candle. You can see there's an imbalance here and a break of structure. So this is the last supply candlestick. This is the last bullish candles, the last place where the buyers were active. And let's go to the daily time frame because the weekly time frame has been mitigated. So let's go to the daily time frame and analyze a little more. Haven't I seen this trade? Oh my god. Ooh. What do we have here? Okay. So this is the last candle before the impulse move. So what do you see here, guys? You have change of character here. So our daily time frame, order block has been mitigated also. So let's go to the 4-hour time frame. Let's see what we got there. So there are some demands were taken from here. You can see the demand has created this imbalance here and it pushed to this upside, which also lead to the break of this resistance here. So it's also a valid demand, but it got broken and the market pushed to the upside, create a new high, push to the downside, push to the upside, push to the downside, which means we have a new break of structure. So break of structure, short form of it is POS, and this first one here, a change of character. So but I would also use market shift structure, which is MSS. MSS means market shift structure. Yeah. So we'll look for the last supply before the impulse move, where there's an imbalance. Before the break of structure, the last supply that leads to the break of structure. So as you can see, the last supply is this area. Then bam! You can see what happened. The market pushed to the upside, create some available liquidity here. Create some available liquidity here. Then create a flip move to the downside. Sweep the buyers who are trying to push the market to the upside, and push up, sweep the sellers, the early sellers who are trying to push the market to the downside. And you can see the market mitigated this demand and started pushing down, which create this long bearish candlestick. So let's go to the lower time frame. So the lower time frame, there's also a rejection to the upside. So I'll take the trade from here. As long as there's available sweep here, you can see the rejection on the lower time frame. The rejection on the lower time frame. As I say, this is a rejection, hammer candlestick, then an aggressive push to the downside. You can enter for a sell here. Why didn't I saw this trade earlier? I would have took the trade and see the massive push to the downside, but I won't be going for that much risk to RR. Instead, I'll just be targeting this low down here. I see the impulse move to the downside, push. The market started pulling back. So if you have to look for another entry, you could have had it here. Another slim entry, but depend on your broker. So you are up. You can see the top down analysis, the important of the top down analysis. So you go to the 4-hour time frame. You are up. You can see the massive bearish engulfing candlestick. So very short trade, target to the downside, and boom, you have smashed your TP. So this is the only thing you need to improve your win rate. Top down analysis. There's nothing more than this. Get the buyers, get the higher time frame buyers, get your weekly time frame buyers. Make sure your weekly and the daily time frame are on the same buyers. You can see the move. Market is still pushing down, it's still consolidating, but you're already in profit. So with this top down analysis, we are able to catch up to 6 hours on only this trade here. We're able to get 6 hours on this trade here. So that's how you go doing this area. So it's not. So we're still pushing down on the AUD/JPY while we're waiting for entry on the EUR/USD. Why is it not loading? What's wrong? So we are still waiting for entry on this EUR/USD, but so far I've been able to get 3 to 4 routes to the reward on my first trade, which I smashed it a few days ago. And now waiting for the second entry in this area, so the market will align with the higher time frame movement. So not so much. Just going for 4 hours on this stage, because you can see the 4-hour time frame is huge order block here, which the market might likely react to. So once we're in, we'll be targeting this area for our take profit. So guys, you are just one trade away. Peace out.